Hey everyone, how's it going? It's Friday after the close. Let me go through this week with you. So to start off on the 22nd, just because we have so much volatility, you see how high the VIX is and the European news and Ben Bernanke and all that stuff. So if you were going to use this in the beginning of the week, I stated down here that you need to anticipate the strikes are going to be shifting around. So if you are going to make a play, be cautious of that and kind of know that they can, because times are so volatile. We're not exactly in a smooth, quiet market. And then originally on Monday, the highest call open interest was a 350 and the 385 was. And then it shifted down on Wednesday to the 380, shifted to the highest open interest. Anyways, you can read that. But what ended up happening is as far as this goes, the 98% probability once again proved right. Just because you need to give a strike or two for a little cushion for when these do move. So I always use the 98% probability. Why not? Why not have the best odds in your favor and even go out further? So with that said, let me show you how, and that's for like talking like binary bets. If you're going to do a credit here where you cannot have it go over, that's what I'm saying here. Let me go over with you just in general, everybody can use. So the 350 was the highest open interest at the beginning of the week. There wasn't a ton on it because these were still newer. And then the 385, the 380 right around there. So let's see what happened and how you can use this data. Let me go back. So I always say, when it gets down to that level, that would be your buy area. When it gets up to here, that would be your sell area. If you just had no clue, Apple's hanging out here in the middle. So let's see how that would have worked out to somebody in the beginning of the week. So on Monday, the highest open interest was 350, we said. So once it gets down to that area somewhat, so we're down here at 355, 357. So, that level would have been your buy area. That's how you could have used this open interest data. And then guess what? We kept bumping up against, so this is Wednesday right here, up against this 380 level, 378. And then by Wednesday, this was. So ta-da, here, there's going to be some resistance here and some selling, or people wanting to keep it under that 380. And what do we have here? So if you would have bought towards that put highest open interest and sold towards that, ta-da, it worked perfectly. This is when Steve Jobs retired. Just ignore that, and it popped back over. Then once again, it kind of held. This was kind of a good thing to have here because it gave some support or some buying pressure and stuff. So it was kind of good to have that 370 there. So it kind of gives a little hand under the stock, and we were just kind of hanging out in that 370 range, right here. And then today, what do we have all day? Is pretty much, I'll go through with in detail, but pretty much hanging on that 380 level all afternoon. 381, right in that area. So if you sold if you would have sold this 380, it shouldn't go much above that, which is true. So if you would have sold at 380, so you missed out on 3 extra points or whatever. But that's how you can use this data, and it's great too. So right here is a 1-minute chart intraday of Apple. And then this is the 380 call open interest. And again, on a 1 minute. They're not exactly timed up, but I'll go over that with you. So let me show you how this can help you look into the future of what happened today. And whenever it does go above this highest open interest, let's dissect kind of why that's happening and what's it telling us about the future. So as you can see, let me go to this tools tab, and this is this weekly August open interest and call volume. So your calls down here, the highest open interest was a 380 at 13,000. Well, today you traded 40,000 contracts. So at some point in time, these all closed up. Now, in a normal circumstance, when options are fully, in control. You're going to have people that do not want this, are going to try as hard as they can, or as soon as these start to close down, it's going to create the slightest little bit of selling. And whenever it does, it happens very quick. Like, at that 12 o'clock in the afternoon, that's where you get your sudden spikes from, like right here. So it happens quick, and it's kind of a feeding frenzy. Once people see this, shorts will come on. Oh, it's going to break, and momentum traders and everything will get on. And so that's why it's super easy once it comes up to these to knock it down, another $5 to another strike real quick, or just knock it down very fast every single time, because these shares get dumped immediately on the market. That's why it's the velocity of it. It's not just a smooth selling where there's somebody. They're just constant selling, and then momentum people get involved. Well, now how we can see into the future is Apple should have closed under this. But when it doesn't, we need to look why. So here is the 1 minute chart. We have, and like I said, these are going to close up at some point in time. And we have right here at 12:14 in the afternoon, this Pacific time, we have a huge spike in volume on the calls. So I imagine that's where it got forced closed, or just closed up, or there was volume there for some reason. And so let's go to 12:14. So we're here at 12:14. It's off about a minute. If we go to 12:15, here's where the selling started. So I imagine this big volume spike right here is all these shares being sold off and a lot being closed out immediately, like kind of forcefully, and they can't do it over time. Anyways, there's a big volume bar there. So it gets dropped. Well, what should have happened if there are no buyers in Apple? It should have kept going and going and going. There shouldn't have been, because once you get this momentum, like I said, it should just keep going. There's no real reason for it to stop. Well, there is now, because there's buyers here that soon as this volume stopped, there was no more. This is just all options volume is what I'm getting at. There should be more short sellers, or just longs, people scared and whatnot, just people getting shook, and it should keep going and going and going. Well, it didn't. Once option volume ran out, once this is caused by options, once it ran out, it completely rebounded right back. So that means there are no sellers left in this stock, and it will go much higher. Going going over here to the September, this is where it will get scary for people that are short the stock and whatnot. Is like I said, I've just been kind of leery of this just because all this news is out. But seeing this today, this is gonna look like kind of that last July run. I think these are gonna actually come true, where it is gonna come right back up into this range, and it can go as high as this 430, 435 area. And then the floor in Apple, just the lowest point, is going to be your 400. So we'll keep an eye on that. But looking into the future, that's a great, great sign. So hopefully everyone have a good weekend.